back. We're now in conversation with Mr. Ashwath Ram. He's talking to us as well on the preparations ahead of the second wave. Managing Director at Cummins India. Mr. Ram, thanks so much for joining us. Now, when it comes to the kind of hit on the manufacturing sector after what's been, a very challenging year already in 2020, do you think that we're better prepared this time, that the impact will not be as severe?
I certainly believe the impact will not be as severe. We're a lot better prepared. We've now been dealing with the pandemic situation now for over a year. And so our infrastructure is in place. We've now started even vaccination drives within the company. The government has been supportive in allowing our factories to be centers where we can administer the vaccine with the help of the government to all of our employees. So all of that, bodes well that this time around we are a lot better prepared than we were last time.
Okay. Now, export growth positive in telecom, of course. It's one of the segments where, we've seen a lot of positive traction, particularly on the back of investments in 5G across most Asian countries as well. How are you planning to leverage export growth?
Cummins has always targeted exports very significantly in our India strategy. And Cummins is one of the major hubs as far as manufacturing is concerned. It has three major hubs around the world, the first being at the parent home country of the United States, the second being in China, and the third being in India. And Cummins leverages the scale and investments and capacities we have set up in each of these countries to serve the markets around the world. And certainly India has advantages as compared to even our other two hubs in terms of greater capacity and also better cost structure. And it bodes well for us as the demand keeps increasing to be able to supply more markets around the world. And certainly as opportunities open up, whether it be for 5G or whether it be for data centers or whether it be for the infrastructure push that many governments and countries are making around the world to improve their economies and bounce back from this pandemic, the scenario is positive for Cummins in India.
Okay. All right. What about plans to also improve global market share, the kind of new products you might be looking at over the next few years? What's the kind of CAPEX that you're planning?
Yeah, Cummins in India, we have made significant investment in CAPEX over the last 10 years. I would say in the last 10 years, Cummins has invested close to $1 billion in India to set up capability and capacity. And going forward, we don't have to make that scale of investment to meet some of these demands around the world. We just have to make incremental investments in CAPEX in the form of new product introduction or some balancing investments that we need to make. So the bottom line here is that we are already ready with many of our investments and we are more than ready with products as well to meet the demand of tighter and tighter emissions. Some of the mega trends around the world of going towards more electrification, of going to a zero carbon kind of world. We are ready with many of the investments required to make those things happen.
Okay, fabulous. Mr. Ram, some analysts, however, are saying they don't expect, for example, the performance in the power generation segment to sustain. Weak outlook that's building up for those pockets in particular, infra, commercial. What's your outlook given the ever-evolving situation?
I think there are favorable mega trends for us at Cummins. The first, of course, is the continued investment in infrastructure, whether it be in India, China, America, or Europe. Every country, as part of coming out of this COVID situation, is pumping in huge amounts of money into building infrastructure. And whenever there is money put into infrastructure, Cummins wins. Now, when you just look at India, for example, we ourselves are pumping in huge amounts of money in building roads, infrastructure, ports, etc. And all of those, products use Cummins engines, and so it's great for us. There are a few other things happening from favorable government policies, in the sense that the government has introduced the vehicle scrappage policy. While there is still some amount of clarity to be had there, all of these are favorable not only from a cleaner environment, but also in obsoleting older polluting technology and bringing in some of our newer technology. And we have seen around the world that whenever emissions get tighter, that Cummins has always won, because we have the leading technology in that kind of scenario. The second area is that there's a lot more relaxation in FDI norms. The PLI schemes have come in, which means that there is lot going on in favor of people investing in the CAPEX cycle, in building a lot more infrastructure, in putting in money into India to build capacities. And again, when those kinds of situations come in, it is great for Cummins, both from power generation side as well as from a construction and industrial engine side. And the infrastructure boom is not a short-term kind of boom. And I would disagree with some of those analysts who think that market is going to slow down. I think we are at an inflection point, especially in the construction segment, where a similar situation in China had 10 years of growth, of double-digit growth in construction. And my belief is that while we may not have that kind of growth, at least the next couple of years bode very well for growth in the industrial markets in India.
Sure. Have all the hurdles and challenges when it comes to supply chain issues been ironed out? And then what is the update on the supply of electronics going forward? Because again, countries are getting more stringent about, export-import.
Yeah, it's a dual problem right now. The first, of course, is that India is ramping up, but so are other countries around the world. So there is pull in terms of components and especially in steel and castings and copper, and all of those kinds of commodities are being sucked up around the world. So there are supply chain challenges, but those are we have significant scale and capacity, so we are able to overcome those kinds of challenges. Where we are struggling quite a bit, and I don't think we are going to get solutions in that space very quickly, is in the electronic space. And there, the automotive electronics consumption is a very small percentage of the global electronics consumption. So there is a problem there, and it is likely to take at least a couple of quarters before that problem is resolved, and that is a constraining factor as far as supply is concerned. So as of now, we have significant more demand than we are able to match with electronic supply.
Okay. You were operating at around 80 to 90% capacity across most plants in the third quarter. Q4, what is the current capacity at plants, and how is this impacting your overall business? If you could just give us some color on that.
Yeah, so demand continues to be strong. We continue to operate our plants at the same level we were at Q3. As a matter of fact, we see demand strengthening in most of the market segments. We are trying to balance out this constraint we have in supply chain and electronics by trying to push more of the products which have different types of electronics or more mechanical products, etc. So we do see a positive outlook even for Q4 and moving forward. Typically, for a company like Cummins, Q4 has been a weaker quarter, mainly because there is, inventory correction at the end of the quarter. But overall, the situation still looks positive.
Sure. With the government push towards cleaner and greener power and use of hydrogen, setting up the National Hydrogen Energy Mission as well, how much of a boost do you see for your business? Because you've invested a lot in these areas as well.
Yeah, it's great for us, the whole push globally towards use of cleaner energy. We think it's a 20 to 40 year journey where the fuels move from pure diesel to a combination of gas, battery electric, combination of hybrid, and eventually to fuel cells and the hydrogen economy. And we are gearing up to play in every part of that cycle. In the short term, over 95% of what we sell or will continue to sell will be from the clean diesel space, where we are the market leader. And we continue to put in more and more investments into hydrogen, as well as into the hybrid and battery electric vehicle systems. And we think that gradually, as things open up, we will be rightly positioned in India and in other markets around the world to have a significant impact. We are pretty much bidding for every tender that is put out by the government, whether it be for rail, whether it be for buses, whether it be for hydrogen electrolyzers to produce hydrogen and then use it for multiple applications. We have products available in each of those spaces. We are continuing to look to partner with different agencies around the country and different OEM partners. And the outlook is positive, though I must continue to say that this is not something which is going to happen overnight. It's a 20 to 40 year journey is the way we are looking at it.